For the market breadth wise, there is a major change here. Last week, we talked about this is the long-term percentage of the stocks above the long-term moving average, 200 MA. This is 150. This has improved from 50 to about 52, 49 to about 51, which is a great thing. As long as we got a long-term MA above 50, that's super positive. And not to mention about the short-term moving average. So this is a percentage of the stocks above the 50-day moving average and also above the 20-day moving average. As of yesterday, should be as of like last Friday, is 66 and also 72. Is near overbought. I highlighted in red here, near overbought. Usually I classify overbought as about 80, but mainly I need to check the chart and look at the overbought area, which we'll look into that shortly. And also for the market breadth in terms of the long term, 200-day moving average and also 150 moving average has been improved significantly. That's for the last 2 weeks. So I think this is very important. It means that there are a lot more stocks participate in this rally or this bull run. And in terms of the trade management wise, I still prefer to sell into strength to lock in partial profits. I should say partial. So it means that I still at least keep one half of the position, just in case that it still can keep going up. And so I want to maximize the profit. And for the stocks like AI and NVDA, which I will look into that during the trade review section. And right now, I want to show you how's the market breadth overbought look like. Because I put it here for at least 2 sessions near overbought. Let's take a look at the short-term market breadth and also the long-term market breadth. Let's take a look right now. And in terms of the market breadth, basically there are still a lot more market breadth that we can look into. But so far, I want to guide you to this MMTH, the percentage of the stocks above the 200-day moving average. You can see it right here. This is, let's start from 2021 and also 2022. This is this year. At the moment, I keep mentioning about above 50 and also preferably above 50. This is actually, you can see that an access zone where it's previously as a resistance, now turned as a support. And means that we need at least 40 to 50% of the stocks that are actually above 200-day moving average that actually participate, means that they are actually participating the rally, the bull run. That represent a healthy situation. Right now, you can see that after the breakout, it sort of just consolidates at above the 50 level. And where's the overbought? I will classify as the previous swing high as the overbought, or for MMTH is around 70, above 70 is overbought. But usually it would take a long time for the long-term breadth to reflect, because this is not the short-term breadth like the 20-day moving average or the 50-day moving average. It will take at least weeks or months for it to reflect. Until it hit that, then it will be very overbought, right? Next is the 150-day moving average, is similar to the 200-day moving average. So in terms of the chart, I will also classify the 40 to 50% of the stocks that are above the 150-day moving average. That's also very important. And in terms of the overbought area, we can see this is the overbought area. 60 is the high overbought, and also previous swing high like 70. The previous swing high, I'll classify that as an overbought. And if we look at the 50-day average, this considered as the short-term moving average, percentage of the stocks above the 50 MA. For the moment, when it's approaching overbought, 70, 80, that's considered as overbought, because you can see that 80 is the limit, at least for since July last year. I would say it's probably still have more room to go until it bump into the overbought area, 80. And also for the 20-day moving average, here is the overbought. 80. Above 80 is considered as overbought. So right now is very close to 80 and it's over there. Still have a bit of the room until we see the upthrust by a temporary commitment above 80 and then drop back below. This is the level that I consider as a overbought. In terms of the percentage of the stocks above the current level or near the overbought level, just based on the market breadth alone, we still can say that there's more room for the index to go up a bit until we see that all the stocks are near overbought or already into overbought. Right now is near overbought. We got a question, are we close to correction? Well, at the moment, I will say yes. We probably close to a correction. And let me address this. Let's take a look at the index right away, take into account the end of quarter effect. This is S&P 500. Okay, last week we were somewhere around here. This is last week, last Tuesday. Let's see, so Tuesday, 13th of June. Last Tuesday we were somewhere around here, and I mentioned that there was a level previous swing high, 43. But we did not really see much effect. It just have a gap up and then follow through. Next level is here, okay? About close to 45. What happened at this level? Did we hit 45? Well, almost. I would say almost. 4493. Close to 45. And this is close enough. That means that it's already hit this second target. And also based on the analog from NASDAQ 100, I mentioned last 2 weeks. So we got 3 push-up in NASDAQ, which is in a final leg up. But for the S&P 500, we got a first leg, consolidation, second leg. Now it seems like we are getting a pullback or consolidation. Right now it's still at the second leg. If the analog is to hold true, we can anticipate a final leg up, the third leg. The third leg could be hitting 46 or maybe short of 46. We don't really know. So we need to let the price guide us. But so far, this could be a pullback or consolidation. This leg up is extended, or you can say almost like a buying climax short term or in terms of the swing. And we got a rejection tail on Friday, last Friday. And at the moment is having a little bit of the pullback, not too much. Right now, I will actually anticipate a pullback at the moment because first, this is the level, the resistance level tested and have a bit of a rejection. And right now is extended and overbought. So it makes sense to have a pullback or consolidation. Maybe it will be as shallow as like this or is somewhat deeper. But anyway, I'm looking this day low as the support level. As long as it's still within this cap, within this strong bullish momentum bar, is still very positive. In case if break below, then that will take some more time to recover, means that it will take a few more weeks to consolidate. This is the first level that we need to watch out for. And yeah, this is a zone somewhere around 44. Yeah, this is the 44. So 4,400 is a level. And this is what I could anticipate. A pullback and probably resume. And then we go into the final leg up into the end of the June. Hopefully, if we don't really have much supply coming out, take profits, then hopefully you can just bounce back up from here and then resume the uptrend. And if it is going to go into the third leg and hit this resistance level at about 4,600, this is a super significant level. And by that time, I'm sure that a lot of the people will be taking profit. And that is the time that the market should go into a correction. I mentioned that this is pullback consolidation. This is, I hope, is also a pullback consolidation. And if we go into here, 46, then likely market should go into the correction and like this. First push, consolidate, second push, pullback, consolidate, third push, uptrust, or attempt to test 46. Then we have a sell-off or a correction. Means that a change of character compared to the previous down wave. Because so far we see that it's super shallow in terms of the pullback. So far, still very shallow. Even if we get something like this during this trend when it's breaking out, then it's still perfectly normal. By that time, if we get that, then that will trigger actually a correction. We should spend some more time, and before we resume the uptrend, there should be a lot of the rotation going on right here. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.